Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York. It is Tuesday, June 28th, 2016, and this is the Daily Report for Gold and Silver. We are looking at gold futures trading off today after having such a dynamic rally over the last week and a half. This kickback is to be expected. We are now looking at gold trading at 1314. High on the day, 1329, low 1308. We did have a trade that we were stopped out of today. That will be the first thing on our agenda plate, so to speak. Let's take a look at our first chart. So traders, with this move down today in gold, we were effectively stopped out of our most recent trade. Of course, we were in at 1332. Our stop was below 1314, so we're marking ourselves out at 1313. Market is currently trading roughly at 1313, off of a low of about 1308. What that tells me is that the greatest likelihood in terms of our current Elliott wave count and what we're looking for this market to do in the upcoming days is we've run into our first correction within this wave 3. Now, wave 3, I believe, is still fully intact, but it's going to be composed genuinely, most probably, of some sort of a 5 count. One up, down, and up. And so as we look at this area right here, which is, I believe, the conclusion of our wave 2 down, this is our wave 1 up, putting us in our wave 3, we now have a wave 3 which has gotten its first leg. We are in our second leg. We will then go into a third leg. That being said, what's most important is to determine exactly where we could see this most recent correction go to and look to initiate another long position, because my sense is we are still fully in rally mode, and until it breaks through it would have to actually break through about 1250. It would have to have a low below the conclusion of 2 here, and that would signal something. But other than that, we want to now do a basic fib retracement. To that end, let's go ahead and pull up a chart with a fib retracement. So, in attempts to ascertain logical points to look for a potential conclusion to this sell-off, and it's really not a sell-off, I'm still looking at it pretty much as a consolidation. I say that because this is a 240-minute chart, and when we look at recent activity, it really has been just hovering within this area. 1336 on the high here, 1307 on the low here. 1307 is a 50% retracement of this move up, and this high here is a 23% retracement of this move up. And so it's genuinely trading within this range, and so we might not see a traditional kind of a correction because there is so much bullish sentiment in gold. However, it's currently trading, as I said, about 1314. A retracement that would go to its deepest anticipated length in terms of a model would be something like a 1, and then a 2 would take you to a 61% retracement, and that comes in at around 1300, 1294. So while the jury is still out in terms of what we're going to see over the next couple of days, the most prudent move, obviously, I believe, is to sit on the sidelines, let the dust settle. We've got some exceptional trades under our belt, and I certainly want our next one to be that way. We did take a small hit today, but that's part of trading. We're not going to win all of our trades, but most importantly, we want to keep our winners large and our losers small. We want to be able to control that risk and reward in that way also. These are just some of the techniques we use to try to be as profitable as possible each and every day. Nonetheless, we were stopped out today, but as I look at this and as I look at this short-term study, 240, we do see this market going lower, but after this tremendous spike up, I expect a little bit of pushback and some genuine profit taking. And so traders, yet another way to look at it is to pull out some of our longer term studies so we can take a look at a much more big picture, so to speak. And the way that I am looking at it, of course, is we had our major fifth. That was our record top above 1900. Our long protracted correction, multi-year correction, which concluded our A wave, and I believe we're now in our B wave. Within our B wave, I believe that we have hit we're still in wave 1 of that B wave. And what we have done here is a basic fib extension, because what we're looking at here is that was that irregular. This was wave 2. And so now we're trying to plot our wave 3. If wave 3 is 161% that of wave 1, we're looking at 1550 in terms of the price of gold. If it is 61%, which it cannot be, because wave 3 cannot be the shortest of an impulse wave, that would be 1335. But that 61% is important because that's really where we're finding our current level of resistance. And let's add one more line to that, which I have just done, and that is if wave 1 and wave 3 are equal, we would be looking at something like this. Here's our wave 1, wave 2, and wave 3. This is that 1-to-1 relationship. Would take us roughly to 1490, and that is currently my upside target, which is just at around 1400 based upon these models and studies. Remain flat. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.